industrial consumption has gone from 50% of the overall demand to 67% of overall demand. We're nowhere near where we could be in silver mining stocks. That's probably going to start soon, and it could go for 2-3 years. The investment side of it can ebb and flow, but when it flows, look out, because that can really push silver prices higher.
Walk us through your $300 silver target roadmap. What takes us there?
So what takes us there ultimately, I believe, is
our next guest called triple-digit silver for many years. He was on the show with me a couple of years back, and he had called $300 silver. He's going to give us his forecast and timeline for that call. So he's been right. He's also called $5,000 gold. He's Peter Krauth, author of The Great Silver Bull, which came out in 2022, and author of the Silver Stock Investor newsletter. Peter, congratulations on a number of very important calls that you've made correctly over the last 3 years since I've started working with you.
Thanks very much, David. Appreciate it. And thanks for the chance to talk about it.
$100 silver validated a lot of people in this space, including yourself. Actually, not a lot of people. There were a few brave souls who've been calling for triple-digit silver for quite some time. You've been one of them. You and others have been ridiculed for years for being crazy, out of your minds, just flat out wrong. And actually, if you look at the silver price, it's been flat for a number of years. And when I did that interview with you 3 years ago, silver was trading at $20. What gave you conviction when it was at $20 and flat, by the way? It wasn't like it was moving up or down tremendously, and you were making this call during a bull run. It's easy to make forecasts for more bullish predictions during a bull run, but 2022 was a flat market. What gave you conviction back in the day, 2022, to be calling for $300 silver, which we'll revisit today?
So you actually made the point for me. I'm glad you asked that question, because somebody asked me not long ago, how did you know silver was cheap at $20? And the answer was nobody wanted to talk to me, except you, David. You did want to talk to me. But
you had a great book. Everyone should check out The Great Silver Bull.
But yeah, I mean, it's the whole thing. People don't want to buy what's hated, and they want to buy what's loved. Right now, you could argue silver is loved. Back then, silver was hated. So it was an easy buy. And, I've been saying recently that it's harder to be a contrarian now because, silver in particular, but so many other things have moved up so much that, for me at least, it's much more difficult. If I want to look for, an undervalued sector, it's starting to be slim pickings. But that doesn't mean that, the opportunities aren't there.
What did you mean by undervalued sector? $20 silver, why was it undervalued?
It was undervalued because I had done the homework, I'd done the research. I could see that we were facing deficits. We had started already into our second year of structural deficit in silver. We were consuming about 15 to 20% more every year than we had of supply. Just quickly, the silver market is 1 billion ounces a year. About 85% of that comes from mining, and about 15% comes from recycling. Well, silver mining supply peaked in 2016. That's 10 years ago. At the time, it was 900 million ounces. Today, over the last 5 years, we haven't managed to get meaningfully above about 830 million ounces. So demand's gone up, supply has been flat. So we've been in a structural deficit situation. The Silver Institute has forecast that over the next 5 years, we're going to continue to be in silver deficits, and we will reach new record deficit levels. So, I could see this back then, was willing to be patient. I looked at that. I looked at different indicators. And for me, it was, like I say, I felt, maybe it's a little bit masochistic, but it felt relatively easy and comfortable to buy things that nobody else wanted to buy, and to be willing to sit and be patient. I like to say patience is the rarest commodity, and the last 4 or 5 years have proved that to be true.
I'll come back to the silver deficit issue and the patience issue. That's very important. I know a lot of viewers who have been following the silver space maybe for decades. Hopefully you haven't sold right before this rally. I know it's easy to give up on silver, especially after it's been kind of just floundering around $20 for many, many years. You were telling me just now that it's hard to be a contrarian now. Are you insinuating that maybe now it's getting a little bit overcrowded?
That's a good way to think about it, because I think in the very near term, Probably, yes. I do think that if you look just, I'm not a technician, but if you look at the chart from a technical perspective, this is one of these parabolic runs higher. And typically, historically, you do get corrections, and you can get pretty significant corrections. Silver's known to be volatile, and that's why, thankfully, a lot of people stay away from it, and that creates opportunity for those who aren't afraid of it. But I think that suggests that in the near term we could be due for a correction. I've run the numbers. I've looked at this historically. If you look, for example, at the last big run, which was from 2001 to 2011, silver started out at $4 and ran to 49 and change in April of 2011. So that's more than a 10x. And during that decade, you had 5 corrections of 15% or higher. The average was 30%. And yet, despite multiple 30% corrections, you still went up more than 10x. So that's why I think that, it's all perspective. You have to know where you are in the larger, the bigger picture, in the larger bull. And so I think it's still quite early, but that doesn't mean we're not due for a correction to rebalance sentiment.
Okay, we're going to get Peter's rehash of his $300 thesis one more time. But before that, let's talk about what happens during this correction. What is the magnitude of this correction that we can expect in the past when silver peaked in past bull cycles, 2011, for example, 1980? First of all, in both those cases, it didn't stay above 49 for very long. In fact, only a day or two at $50 in 1980. And then it corrected at least 50, 60%. Exactly. More so in 1980. And the point I'm trying to make is, in those prior bull peaks, silver's correction did not recover.
Right.
So when you're talking about a correction that's going to follow here, and then it's going to go back up, I'll just point out that it hasn't happened in the past. What's different this time?
So what's different this time is that, 1980 was the end of the secular bull market. Silver had been rising for a decade.
Yeah.
And there were plenty of fundamental drivers, but at the end, it all became about sentiment. It doubled multiple times in the last sort of few months. And if you look at the 76 to 1980 period, it went from $100 to $850. So that was 8.5 times. In 2011, it was not a fundamental run up. I think that yes, we're at all-time highs. And, it's uncharted waters, so to speak. But how did we get here? I believe that a lot of it is fundamentally driven this time. And I think that that's what makes it different. I mean, it's always, dangerous to say it's different this time. But frankly, in many, many ways, it is different this time. And I think that's what's kind of given people, the relatively early investors, the conviction to get in and to sit with it until it's run to 50, 60. David, think about it like this. I am prepared to say that we're due for a correction. And part of it is because it took 45 years to match that $50 level. So I had been saying that once the next time it gets to 50, it's going to ultimately see that as a new floor. And it took 45 years to reach 50, surpass it, and stay above it. And then it took 3 months to go from 50 to 100.
Yeah.
And so that's why, from 45 years to 3 months to go to a double from 50, that's pretty aggressive.
Yeah.
And but as I say, everything that's led to where we are now has been more than anything fundamentally driven with these supply deficits, this silver being deemed a critical mineral by the U.S., China controlling 60 to 70% of silver refining. The U.S. looking at spending $2.5 billion on a strategic minerals stockpile. Trump telling his trade advisors, we should consider the idea of price floors on these critical minerals. There's a lot of India now saying that you can use silver as bank collateral. I mean, it's on and on and on. And now you've got people like Bank of America. I think it's Michael Widmer who said that he thinks that, based on the ratio and so on, we could see anywhere. I mean, I'm not that aggressive, but he's saying we could see anywhere from, I believe it's 100 and $135 to $309 this year. I think that's unlikely.
Yeah.
But I do think we could reach the lower end of his range.
Before we continue with the video, let's talk about a company that's building serious gold leverage for the long term. Our sponsor today, Stellar Gold, is sitting on 3 major Canadian projects. Tower and Colamac are among the largest undeveloped gold sites in the country. The Tower project alone could be worth $2.5 billion after tax at a $3,200 gold price assumption. And if prices go higher, so does its value. Colamac spans over 1,000 square kilometers of greenstone deposits and could be Canada's next big gold camp. They also have Hollinger Tailings, a cleanup project that could deliver near-term cash flow. Across all projects, they've drilled over 16 million ounces of gold, which would cost over $2 billion to replicate today. With a seasoned team, Stellar Gold is one company to watch. Scan the QR code here on screen or visit stellargold.com/David Lin to learn more. Peter, silver's chart reminds me of Bitcoin's prior bull and bear cycles. So going back to 1980, it peaked around $49 for a day and then bottomed out a few years later around $6. And then it stayed around $5 for basically 2 decades.
Right.
Yeah. So that was a 90% or 80% correction from its top. 2011, we had $49, $48, and then back down towards 14, so another 75% correction. The point is the corrections got smaller and smaller.
That's true.
So if we extrapolate, perhaps it'll go down 50% in the next correction. That still brings us to 50. Is 50 the new floor?
I believe absolutely it is the new floor. Again, I'm not a technician, but
yeah.
I know of that enough that these ceilings that take so long to break through typically do become new floors. And I think that, having gone to such high levels right now suggests that it's very realistic. I was expecting a correction through all of last year, frankly, a more meaningful correction, and it never came. I mean, from May until January, all you had was a dollar, a couple of dollars. When it finally broke in mid-October, broke $50, ran to 54, went back to 48, stayed around that range for about 3 weeks, and then just ran higher. And so for silver in particular, but for gold as well, what that said to me, from the perspective of watching how these markets behave, price means a lot if you look at how it behaves. And so to me, it said that there is a lot of money, intent buying on the sidelines that was just sitting, waiting for the smallest pullback to just buy. I'm convinced there were traders that had instructions that were, you see this thing pull back $1, $2, buy, accumulate. And that would explain the kind of behavior that we had through last year right up until now.
Speaking of the floor, is there an incentive price for miners below which production may slow down a bit?
Absolutely. And we were there for a long time. And I believe that's why we had silver going sideways for so long. Right now, I would say that price is probably somewhere around $30 all in, and maybe even a little bit higher. So, if you're looking for an absolute floor, I would think that would probably be an absolute floor. Obviously, that's a long way from where we are now. Doesn't concern me because I do think that 50 would be the new floor. Yeah. And frankly, I would even be kind of surprised if we saw it go back to 50.
I mean, just for context for the viewers, $30 silver only happened a few times in silver's entire history. So even though $30 is literally 33% of its current price right now, it's not a number that the silver price has seen.
That's right.
Many times before. It's not something we've been used to. That seems very high to me, even in 2026. Is there a reason for why cost inflation has gone up so much for miners?
Well, look, the miners have had a tough time, and I believe what explains the fact that the silver price seemed capped, and this is how I had been explaining it for the last few years.
Yeah.
From about I would say from early 2024, I was asking myself, others were asking me, look, if there's if we're in a silver supply deficit, how come the price of silver isn't running up? Is not compensating for that? And so I started looking around what would explain that. And the conclusion I had was that there were silver stockpiles, basically secondary inventories that were sitting on the COMEX, at LBMA, and at Shanghai. So several billion ounces. And the industrial, especially the industrial consumers, were able to go to these markets, buy a futures contract, wait for maturity, take delivery. And because you had this sizable amount of silver that was already mined, that was sitting above ground, any big consumer could go and buy this silver. But if you're buying the silver where it's already been produced, that puts zero pressure on the miners to bring new production to market.
Yeah.
So I had been saying these, you could see it by looking at the inventories. These inventories peaked in early 2021. Within about a year and a half, they had drained by about 40-50%. And I said in early 2024, we've got about 12 to 18 months left of this. And then these inventories get way too tight. And then it's all bets are off. And essentially, that's how it's played out. The market came to terms with the fact, and there's actually a report by TD Securities that came out probably about 2 weeks after I said that at a conference, that says essentially the same thing. We can't support these. These inventories are being drawn down much too quickly, and again, 12 to 18 months before they're drawn down to levels that are much too tight, and then we're going to have to see a price response, and that's what took place.
Walk us through your $300 silver target roadmap. What takes us there?
So what takes us there ultimately, I believe, is a mania phase. I'm not trying to call for numbers like that to be sensational. When I wrote the book, I took the time to make a forecast. And I looked at what happened in 1980, and I thought, not unreasonable. I'm not talking about price right now, but not unreasonable to see similar kind of behavior, right? And so when you get to the end of a bull market, things go crazy and people will pay anything for an asset. And it's the end of the bull market, but it's the mania phase of the bull market, right? So you get these huge run-ups in a very compressed amount of time near the end. And that's what we've seen several times in silver, but in other markets as well. You can talk about housing, you can talk about the internet bull at the end of the 2000s. It's not unlikely to happen again. And so, frankly, what I did was I looked at what got silver to that peak, and what are the indicators? What are the ratios and other things? How did it compare to other assets at that time? So the gold-silver ratio bottomed at 15-1, meaning it took only 15 ounces of silver in 1980 to buy 1 ounce of gold. The Dow ratio, the Dow to silver ratio bottomed. The average home price to silver ratio bottomed. So what all of that meant was silver had become way overpriced because it took, on average and historically, much fewer silver ounces to buy these other assets.
Okay.
So one good example is the gold-silver ratio.
Yes.
So 15-1 in 1980. And so I said, all right, if I'm going to use that as some kind of an indicator of where silver could go, for gold, I'm going to have to make an assumption of where the gold price would go.
Yeah.
So here's what's interesting. At the time, and it's in the book, I said, ultimately, I think gold can go to $5,000. Where are we today, David?
Did you have a timeline in mind for when that would happen? I mean, we're at 5,000 today. Maybe
right.
It exceeded your initial estimates of how fast it could get there?
For gold, absolutely, it exceeded it. I thought we would be there in several years still from now. I love the work that Ronnie does with the In Gold We Trust report. And I think it's a 2021 issue or so. They talk about their forecast for gold, and they give a probability to it. And their forecast was, I think, something like $4,980. Well,
yes, that's right.
we've surpassed that. And I remember you asking me about that.
I spoke with him yesterday, and when he made that call, people thought he was crazy for making a $49.80 gold price call, which now that I think about it, was $20 off from just 5,000. I'm not sure why he didn't just round up. Anyway, that's a conversation for him. But
exactly.
People were skeptical even about the $5,000 gold call. What were people's responses to you initially when you made that call in your book, and I guess also in your private conversation?
Similar. You know, how can you say it's going to get to these kinds of levels? What's going to drive it there? It's going to mean chaos. You know, it's going to be World War III. Now, some people might argue in some ways maybe we're getting close to that.
Yeah.
But, you know, that doesn't change the fact that we've reached it. And we've certainly reached it earlier than I thought, but we're there now. And so my assumption when I looked at the gold silver ratio was that you'd have, I thought, okay, gold could peak conservatively at $5,000. And if you have a 15-to-1 ratio, that was $333 silver.
Yeah.
So that's one indicator. I can't remember the numbers specifically that I used for the Dow silver ratio. I'm pretty sure in the average home price to silver ratio, it was something like 1,400 ounces of silver at the peak in 1980 to the average home price in the US. At the top, when silver was $4 in 2001, it was about 44,000 ounces of silver that it took to buy the average home price, average home in the US. I believe, and if you only take, this is without home prices increasing, if you go back to the 1,400 to 1, 1,400 silver ounces to the average home price of, let's say, $500,000 US, you're at $300 silver.
Right.
So there were multiple indicators that all said to me, that's the kind of range realistically that I think ultimately we could reach in a mania phase for silver.
When will this mania phase come? Does your model predict timing at all?
It does not.
Okay.
No. I mean,
well, let's frame it a different way. So you mentioned a deficit earlier. Deficit from what? Industrial or retail demand?
So the deficit, I mean, demand overall is in deficit. You know,
demand
industrial,
from the industry side or retail
so combined,
side,
combined. But industrial doesn't really have too much in the way of options.
Yeah.
Industrial uses silver. Silver is difficult, if not impossible, to substitute in many cases. So the industrial consumers need their silver. The investors don't technically need their silver. But what has happened is that just in the last few years, industrial consumption has gone from 50% of the overall demand to 67% of overall demand. So what does that do? It squeezes out the amount of silver that is left over for investors. So what does that do? Well, when investors start to come back into the market, like we've seen over the last sort of 5-6 months, is that it squeezes the price of silver up because there's less silver available for the investment side. Because the industrial consumers, believe me, they're not going to do without their silver.
Yeah.
They absolutely need it to get the product out, and they'll get it. So that's why I say that the investment side of it can ebb and flow, but when it flows, look out, because that can really push silver prices higher.
Silver Institute and a lot of other publications have made the assumption that we're going to get a deficit because demand will stay constant, if not higher, and grow. I would argue that at $100 silver, industry is going to look for ways to thrift. Can we factor that in?
Yeah, I mean, no, I wouldn't discount that at all. Frankly, I think that's a realistic concern. But I think the concern comes mostly, if we're going to look for sectors, is going to be something like the solar panel sector, because a lot of other industry that consumes silver consumes it in very, very small quantities for each unit that they produce, whether that's a cell phone or, silver's in cornea replacements in our eyes because it's a biocide. It kills bacteria. So you'd have to imagine there's not that much silver in these kinds of things, in a microprocessor, any of that stuff. But solar panels, when silver was $30, $40, represented about 20% of the overall cost of a solar panel. You know, that wreaks havoc on the industry. So I've been reading reports lately about how many of them are are getting anxious about it. They are looking to thrift, but to be fair, they've been thrifting for years and years. We've seen the amount of silver going into a solar panel just diminish, but that has been flattening. So they're looking at other things. They're looking at copper, for example. There are issues with copper, several. One of them is the fact that copper is not as efficient.
Yeah.
Second thing is that copper corrodes. And the third one is that they have to retool completely to be able to use copper in their production. So frankly, solar panels are the cheapest additional form of energy for utilities. And I could see governments become supportive. In other words, start to subsidize the cost of solar panels if their prices went up too much. There's obviously support for green energy. It's considered, low or no carbon source of energy. So that's a path I think that we're likely to stay on. So like I say, higher silver prices, it gets complicated for manufacturers, but I could see something like that happen. Government stepping in and becoming supportive.
Okay, so going back to the gold-silver ratio, even at $5,000 gold, the gold-silver ratio has collapsed from 100 to 46, so that's halved in the span of a couple weeks. In 2011, we can draw on that as an example of prior history. A prior president, rather, it bottomed out at 32.
That's right.
So at 46, if we assume that history repeats itself, silver's got a bit more room to climb.
That's right.
What's a fair gold-silver ratio that you think could be sustained in the future? And by the way, as you recall, post-2011, this gold-silver ratio started to trend back up again as gold became more favored relative to silver.
Exactly. So, if you look back at the last, say, 20, 25 years, the average in the ratio is pretty high. It's kind of moved higher over the last several decades. And frankly, it's been closer to about 55, 60. But what we do see, if we look historically, is that when the ratio starts to drop meaningfully the way it has lately, it tends to overcorrect, meaning that it doesn't just go back to sort of average of where it's been over the last few decades. It tends to go much lower.
Yeah.
So frankly, at this point, I would expect the ratio, not tomorrow, but that we're not that far off, but it could go to somewhere like 40 or perhaps even lower. And like you said, in 2011, it was at 30. So we don't even have to go to that level to get to a lower level than where we are now. And if gold stays where it is, that suggests potentially even higher silver prices. But in terms of what's sustainable, frankly, I think we could probably be in an area of over an extended period of time, somewhere like 50, 55. And, if gold stays where it is and silver rises, a 50 to 1 ratio at $5,000 gold is $100 silver, right? 50 to 1 on $5,000 gold. So I believe that, after a correction in the silver price, we're going to either move sideways for a while or start climbing again. Either way, on balance, I believe we are moving higher.
Is silver the new meme coin for crypto? are the back in the day when I first started interviewing a couple of years ago, they used to call them degen gamblers.
Right.
We don't use that term anymore. Maybe we still do.
Right.
But the degens of the crypto world, are they moving to the precious metals? Is that what's going on?
Well, not in the West, but, I was talking to someone just earlier, and I've been surprised. I have been talking to a fair number of younger people, and they are interested in investing. They are interested in things beyond crypto, surprisingly enough. And I think things like this, a huge move in an asset, if nothing else, at least in the near term, will draw a lot of attention. And hopefully they'll be patient and won't necessarily jump in with everything they have to invest. But it is going to do some good to the industry to draw attention, and people start to look at it more closely. Meme coin, I doubt it. Silver has been money for 5,000 years. I don't think that's going to, it's not technically officially money today, but certainly lots of people will take it in exchange for other things, and they're taking it in exchange for fiat right now, and it's been a good trade for several. If you had moved in for a few years back, so no, I don't think it's going to be a meme coin. I think when we get to a mania phase, that we might argue that differently, but I think we're a ways off from that.
Okay. Well, I appreciate your thoughts, Peter. Let's close off here. Where can people find your work?
So I'm active on X. I'm active on LinkedIn. You can certainly find me there. If you're interested in the whole sort of prospect of what silver can offer you, and you just want to kind of get to know the market and understand it better and the opportunities, the book I think is a great introduction to that. The Great Silver Bull. You can find that on Amazon. And I write 2 newsletters: Silver Stock Investor and Silver Advisor. So if you look those up, you'll find those letters. And I think that those are also great places to start for research. I think the next opportunity, despite what we've seen, is going to be actually the silver mining stocks, because what we've seen in this move in silver has yet to be reflected in the valuations of the silver stocks.
The GDXJ is already up, 100%?
Yep.
In the last 6 months or so? So that's still undervalued, Peter?
It is because, just technically, you look at SIL, the silver ETF, and SILJ, another silver ETF, and if you look at a 2-year chart, silver and those mining ETFs are even. So those miners have offered zero leverage over silver in the last 2 years.
Yeah.
What has happened is that the price has moved so quickly that analysts are still using $30, $35 silver. Over the next, couple of quarters, they're going to start to move up the numbers that they're using. They're going to probably end up being closer to $40, $50. And we're still at, call it 90 or 100. So I think, but the fact is though, that although the analysts are using, say, $50, the miners who are producing and cash flowing, those cash flows are going to come out selling the silver at $90 and $100. So their profit margins are exploding. And after the next couple of quarters that they report and the market starts to see, wow, these are like cash machines because their margins are so big. I think that's when we're going to get a rotation into the sector, and we're going to get a re-rate in the sector. So that's why I believe, we're nowhere near where we could be in silver mining stocks. That's probably going to start soon, and it could go for 2-3 years.
Great. Well, we'll catch up soon, and pleasure to get your update today, and looking forward to getting your updates in the next couple of months to see where silver heads. Thank you very much, Peter.
Thank you.
Thank you for watching. Don't forget to like, subscribe, follow Peter. The links down below. We'll see you more at VRIC.